Okay, hello everyone and welcome to today's event. I'm Jason Gumpert from MSDynamicsWorld.com and we're here for a session on automating sales tax rate calculations. I'm joined by Kiel Kopenski, Regional Manager at Avalara, and he will also be joined later by his colleague Matt Patrick, who's on the line. As we get started, please know that Kyle and Matt would welcome your feedback and questions during today's event. You can use the Q&A block to ask questions, or if you have other feedback, you can also use the chat area on the right side of the presentation window, and just right to the slides. And I know they will be making time for feedback as the presentation and demo proceed. So without further delay, please allow me to welcome Kyle to start things off.
Hey, thanks, Jason. And thanks, everybody, for joining today. I'm Kiel Kopenski. I'm a regional sales manager here at Avalara. I've been with the company for about 3 years now, and I spent the first few years at Avalara really focused on the Dynamics market. So it's been my role to speak with between 50 and 100 different controllers and CFOs and presidents every month to really understand their sales tax obligations. And with that, I've learned a lot, and I think this is going to be a really productive meeting today. So Matt Patrick is joining me. He's been with Avalara for quite some time, and he's really been in this Dynamics ecosystem for a really long time. So we're lucky to have him today. Thanks for joining us, Matt. All right, so everybody can see my screen. So what we're going to run through today are, I want to get a good understanding of the traits of a successful business. And then from there, I really want to focus a lot of our time on the challenges of sales tax. We need to understand the sales tax landscape and what makes it so challenging. Once we can get an idea of the sales tax processes that are expected from us, then we can learn how it's going to be able to reduce the impact that it has on yourselves and the company. So some of the traits of a successful business are laid out right here, and every single one of you has invested in your ERP systems, and you've done that because you have a few key things that you're hoping to achieve. You want to scale your operations, you want to automate your processes, and really streamline everything as much as you can, and the goal here is to achieve greater visibility into all your core business functions. So when compliance is added into that, sales tax compliance, the whole thing that we're hoping to achieve is to contain the cost and time associated with creating and maintaining a manual process. If you can put something in place that is effective and efficient, then you're able to really manage your resources to the things that are going to drive revenue. So that's what we're hoping to really go into today. So let's get an understanding of what's expected from us from a sales tax perspective. I want to encourage anyone who'd like to add anything or maybe take a deeper dive into a topic to go ahead and put something in your chat, and we can talk about it. So please feel comfortable with engaging us today. So every company has some sort of requirements when it comes to sales tax obligations. If your sales are taxable, you need to know how to calculate your sales tax. If your products are not taxable or reportable, then you're going to need to monitor the status of each state that you're doing, that you have this nexus, these obligations within, so you can understand that when legislation changes, you're changing with it. So no one is immune to change from sales tax compliance perspective. Then if your clients are exempt, you're still required to manage the exemption certificates and documentation. And on Thursday, we're going to be going into that a little bit, so hopefully we can talk to you then. But for managing your sales tax manually, it's always going to be a labor-intensive process. You need to hire or train the resources that can do it correctly. And if you're doing this manual process, there's always that human touch involved. And with human touch comes human error, and that can lead to inaccuracies. And on top of it, it's expensive. When you're spending the time doing sales tax, that's time that you're not spending on driving revenue, because sales tax has never made anybody any money. So the first thing that I always like to start with is understanding Nexus. So Nexus is, it's a legal term, but it's that obligation to collect sales tax and remit sales tax to the states. Every state operates independently of each other. So you need to understand what your Nexus is before you can even start diving into anything else. So there are a lot of activities will trigger Nexus. Some things are black and white. You know, it's going to trigger Nexus in every state. Some states have funny rules that will trigger Nexus there. So some things to keep in mind. If you have any employees that are traveling around or residing in a state, that's almost always going to trigger Nexus. If you're using contract labor, someone that's, you know, doing any installations or implementations or trainings, and if you're hiring anybody to do work on your behalf, that can be seen as a Nexus trigger. You know, obviously having a company reps from state to state, property, anywhere. There's a lot of different things that are doing this, and every year this list seems to grow. I think one of the biggest shockers that I get from the people I talk to is that there are quite a few states where if you are selling through 1099 contracted employees or just other commissioned agents, that can be a Nexus trigger as well. So those are some things to think of, is really have a good understanding of your Nexus, and then from there you'll know what states you need to keep an eye on. So when it comes to maintaining this process and creating this process, there's a whole lot of factors that you need to be aware of. In the United States, there's over 12,000 different taxing jurisdictions. These all have different rules and different rates. Everything's changing all the time due to different states' legislation. So when you're putting your process in place, when you're trying to determine how am I going to calculate sales tax moving forward, you need to stay on top of all these tax changes. There are tax holidays to keep in mind from a standpoint of how do I calculate the sales tax correctly. Most people are using zip codes, and that can create some pretty big issues based on, you know, there's no correlation between a zip code and a sales tax jurisdiction. There's just not. So zip codes are created at the federal level. They're made for the mail. And the reason everyone's been using zip codes is because that's what the native functionality in just about every billing software out there leans on it and relies on, because it's, you know, it's been this close enough mentality for a while. But I want to show this piece right here. So this is it's the Denver area. So we see a few different counties here, and let's break that down into zip codes. So these are the different zip codes that we would be worrying about in this area. But if we look at the sales tax jurisdictions, which each color represents a different sales tax jurisdiction, you can see that there's a lot of room for inaccuracy, and that can create some big issues, not only from a level of the sales tax rate, but in some states, Colorado is an example of this, you have to remit to the state level and to the independent jurisdictions. So here we have, you know, quite a few different jurisdictions to choose from, and if we're just going off of the zip code, we're going to have a really hard time from a reporting perspective on paying the right sales tax to the right jurisdiction. Does that make sense to everybody? I want to pause there and make sure there aren't any questions. Okay. Moving on. So on top of you know, deriving based on the ship from details what jurisdictions come into play, you also need to know what the sourcing rules are in your specific state. So if you are automatically, if you're selling from one state to the next, you only have to worry about the destination of where your product's going or the service is being administered if you're dealing with two different states. But if you're staying within the state, some states will be origin-based, some states will be destination-based, and then there's a couple that are mixed sourcing. So you can see over here on the left, these are the examples of origin-based states. So basically, anytime you're shipping from a warehouse or a location to somewhere else within the state, you only need to worry about the rates and rules of the origin. Destination-based, pretty self-explanatory. It's based on wherever the product is going or the service is being administered. And then you have a couple of states, Texas and California are the examples here. They're mixed sourcing rules. They're kind of going off of a hybrid type route. So in California, you have the state rate, and then on top of that, you're going to apply the county rate of the origin of the invoice, and then you're going to apply the city rate, any specialty jurisdictions. Those are going to be applied on top of that. If it's a service that's being administered, that's always going to be destination-based. And with Texas, you're going to have the state rate, and then the cities and counties are origin-based. Then these specialty jurisdictions are destination-based, and they have some services are going to be destination-based. So it just in these two states alone, there's a lot to keep in mind. There's a lot to manage. You have to do a lot of research and upkeep on your process to make sure it's done right. And then on top of the sourcing rules and getting it correct, based on the address, you need to understand how are the things that you're selling, how are those being taxed? So like I said, every state has different rules in place. So as I'm sure a lot of you know, or if you don't know, there are thousands of different things out there that can be taxed differently. One place, maybe they're fully taxed in one state, the next state they're not taxed at all. And then in certain states they can be taxed at a discounted rate. So this list here, these are just a few examples of differing taxability. So software as a service. Avalara is a software as a service company. And, in the last 10 years or so, that industry has really been booming. So maybe 10 years or so back, there's only a few states that are considering it a taxable transaction. But now, because these states are losing revenue because they're not collecting tax on it, they're starting to define it a little bit better, tax it better, and change their laws so that they can, recoup some of the revenue lost in those sales. So now we have about 20 states that are considering software as a service a taxable transaction, and that's only growing. There are still quite a few states that just haven't taken a stance on it yet. So this landscape is totally changing, and it can be applied to a lot of this stuff. Installation, I'm sure a lot of you know that installation or labor is taxed differently from one place to the next. Clothing and apparel, there's specialty rules about that. Some states have these thresholds. It doesn't even matter what you're selling. If you sell X amount, you're now at a different rate. So it's a lot of research that comes into play. Here's kind of a goofy example that I like to run through. Is a classic Milky Way bar as opposed to a Milky Way dark. So in some states, this will be non-taxable, and in some states, this will be taxable. Ooh, I got a question here. So if something ships from origin-based to destination-based, what happens? So in that case, if it's going from origin to destination, it's always going to be a destination-based transaction if it's from one state to the next. Sorry it took me a minute to see that question. Back to the example. So these two candy bars can be taxed differently based on the rules of the state. So, when you're the first time I saw this example, I tried to determine why is it taxable and why is one non-taxable. And the reason behind this one is such an interesting law to me. This Milky Way bar is non-taxable because one of the ingredients is wheat, whereas this one doesn't have wheat, so it is a taxable product. So there are interesting rules like this all over the place. Are there any questions, or does anybody have anything to share about this? All right. So when we're taking all these factors into account, all the maintenance that it takes, all the research that it takes, not to mention your internal process that you're having to maintain and just give attention to, the cost of compliance is a lot. I mean, the Aberdeen Group, they did a report on the cost of sales tax compliance in 2015, and this is what they found. So we're comparing a small business to a mid-sized business, and they take about the same amount of time in total for managing sales tax correctly, but doing it manually. Some areas take longer than others per state, but what this averages out to is that there are 302 hours that are lost to just giving sales tax compliance attention. That's 2 months of full-time work. That's, like I said before, that's an activity that you can never get a return on. It's only going to cost your business money. And if we put that into monetary value, we need to keep in mind that this is including the direct cost of compliance and the indirect costs of compliance. So if we, one second, go to the next slide. So if we try to put a dollar amount on this, then what we see is it costs a lot just to maintain your sales tax and do it right. So PayScale gave us a number, on average, a financial manager or a controller or a tax manager, they're going to cost about $50 per hour, according to PayScale. So putting that into a monetary value, it costs a lot to do this correctly and efficiently. So here's a day in the life of a compliance manager. The list goes on and on and on. If you want to do this right, you have to give this a lot of attention, spend a lot of time doing it. It can be very overwhelming. So that's where Avalara comes in. That's where automation can help all of this. We outsource this and automate it from calculation to remittance. That's our approach to this. Is we want to automate the entire process. So Avalara is able to calculate the sales tax. We're able to manage your exemption certificates and your exempt sales. And then finally, we're able to file all of your sales tax returns on your behalf. And the way that we've done this is we've taken what's been and continues to be for so many people a manual process, and we've built it on our modern cloud technology. We deliver it through over 500 pre-built connectors that extend right into your existing systems. So today we're talking about Dynamics, Nav, or we're talking about GP, Nav, and AX. We have tons of connectors. So for the calculations piece, this is Avatax right here. This is where we're able to understand what you should tax, who you should be taxing, and how your specific products and services are going to be taxed based on the different rules and regulations for these 12,000 plus jurisdictions out there. We have address validation, so that comes stock with all of our integrations. And the reason behind that is, like I said before, if you're going off a zip code, you're just not doing it accurately. So what Avalara does is we're going by the address level. We're putting your addresses on your invoices into latitude, longitude coordinates, so it's done exactly right. We're geocoding it. And so in order to do that, we have address validation that comes as stock. So if something is done incorrectly, we can still make that sales tax designation. All of the sourcing rules are maintained in the cloud. All the jurisdictions, they're all maintained in the cloud. So every time that you're doing a call to the tax engine, you have the most up-to-date information about the rules, the rates, product taxability. It's all updated in the cloud. So that means you or your IT team never have to do it yourself, ever. So for the exemption certificates and exempt sales, we have Cert Capture, and what that is, this is a lifecycle management tool for all of your exemption certificates. So this is where you're able to request and update any missing or expired or invalid exemption certificates. And on Thursday, I believe it's Thursday, we have a presentation that's going to cover exclusively exempt sales, exemption certificates, how to manage those effectively and efficiently, and we will run through a demonstration of it so you can get an understanding of what that's going to look like. That will be Thursday, not today. And then lastly, the returns and remittance process. We're able to file and remit to all the states and all the independent localities that you collect tax in on your behalf. And the returns and remittance process is it's its own animal also. So tomorrow we have a segment that will be running through that and getting an understanding of that. I think we will glaze over it a little bit today in the demonstration that I hand over to Matt in just a minute. But with this automation process, you're going to be able to maintain the highest level of compliance, and then you can abandon any attempts you've had trying to figure it out yourself and research yourself and try to maintain a process with only support from you. So next I want to show an image of how this all works together, and I think this is really helpful in understanding how the software works and why it works that way. So like I said, we have these pre-built software connectors that install directly into your ERP systems. So this invoice is going to represent an invoice from your ERP, or if you take an order online or whatever. Your system's going to communicate with our tax engine, and it's going to send the transactional data to the cloud. This is done via a web service call. So in the cloud, this is where we calculate the tax, and we return it back into your system automatically. And all this happens in under half a second. So the information that we are exchanging is going to be your customer ID. We want to understand if this customer is exempt or not. If it is an exempt customer, then we will return a zero tax calculation on that invoice. Next, what we're looking at is the date. The ship to and ship from details, very important, so we understand based on the sourcing rules of the invoice at hand, we know how to calculate the tax, and we have the address to get that accurate tax calculation. The next piece is going to be an item code, and so the item codes, you're going to have the ability to map specific products and services to our item codes so that on a per line item basis, we understand if something is taxable, if it is not taxable, or if it's taxable at a discounted or adjusted rate. Then lastly, it's going to be the quantity. So that's the information that we need to make an accurate sales tax designation per invoice. So within our tax engine, this is where we update and maintain all the rate changes, any rule changes, the jurisdictional boundaries, or those change quite a bit, and it ensures that all the information exchanged is going to be accurate and up to date. And we've got about 1,200 employees today, and we have a full team that's directed to updating this and doing the constant research and communication with the states so that as the states make changes, these are accounted for in the cloud. Okay, I got another question. It says, how do you treat sales where an exempt form is on file, but this particular order needs to be taxed? Will it come back exempt because of the form on file? So for that, if you need to, if it's just a one-off case for a taxable sale, you can certainly override Avalara and say, hey, we're going to tax this one, and we will then calculate the sales tax and accrue it. Hope that answers the question. Will it come back exempt because of the form on file? No. That transaction will not be exempted. It'll be a taxable transaction if you want to override it and do so. So you have the power to override it and say, hey, we want to make this a taxable transaction, even though we have an exemption certificate on file. All right, so one more time, once you post the invoice and the information carries over to the tax engine, this is where you're going to have access to audit level reports and jurisdictional reports, and it's where we provide that managed return service that's got a single point of remittance. And Matt's going to show you this here in just a few minutes. But has this image, I hope it made it pretty easy to understand. Are there any questions on how this all works together? So I got a question that says, I've heard that your product doesn't work well if a company has other ISVs, such as ChargeLogic. Is that true? I have never heard that in my experience. We're all mapping to different areas, so it would have to be pretty situational, but, I haven't heard that at all. I can do some research on that if you'd like. All right, one more question. Why would you tax a tax-exempt customer? So the reason you would tax a tax-exempt customer is if maybe the specific order is for them, it's not for resale, or if it's going to be consumed by them, or there's if they don't have a real reason to exempt themselves, then it's considered a taxable sale. Can an invoice line be mapped to multiple codes? I'm not sure I understand that question. Multiple tax codes? So when we're doing our mapping, each tax code has 50 state research behind it. So I'm not sure. I don't think we could do multiple codes. I'm not sure if that would really apply in most cases. It might be more of an edge case, but we can dig into that offline if we want to discuss that. All right, so what I want to do next is go into the demo process. I can keep fielding questions, Matt, while you get set up. Are you ready to take control?
I sure am. I appreciate it, Kyle.
All right.
Yeah, and just to, I think someone had the question about multiple codes to one line item. Usually that's in reference to a bundled transaction. So the nature of the line item really represents various, really different parts that should be taxed differently. Typically, the best practice is to try to break those out to accurately apply the correct taxability rule, just due to audit and mess with the customer. So the customer oftentimes, meaning your customer's customer, when they're looking at their invoice, there's oftentimes a lot of questions about tax because they don't understand how you're bundling tax to the correct number. So we always recommend just kind of break it out to its respective parts, and tax will become more clear to the customer and more accurate and just easier to really map to a tax decision for those types of transactions, if that makes sense. Let me go ahead and share my screen. Kyle, just let me know when you can see on your end there.
Yeah, I've got visibility on you.
Okay, perfect. Okay, so, well, thanks, Kyle. Again, today's focus is really on tax determination, so thinking about it in terms of rate determination, taxability rules. What does that process look and feel like within Dynamics GP, or I have AX up here running too in case someone's out there running AX. And I think what you'll find is AvaTax works very consistently across financial applications in terms of how it's connected or hooked into the application and how it performs, how it really works in that environment. So really when you think of tax setup or the tax challenge overall, normally the customers that we talk to, their main goal is, I just want to go to one place to really set up my tax policy as a business, right? And I don't want the 15 or 20 customer service reps or sales reps or other folks in the company really making tax decisions on my behalf that I'd rather them not make, and I really want automation to take hold and make those tax decisions for them day to day, every day, so we reduce the risk of tax assessments and just the review, right, of transactions being produced incorrectly. So the way AvaTax works, and probably the best way to describe it is thinking of it in the instance of scenarios customers work with on a day-to-day basis, right? So you have the new customer scenario and you have the existing customer scenario. So you think about it in your own process, what do you do today when you're setting up a new customer? Someone in the company is having to think about assigning a tax schedule ID, and that might be for a customer with just one ship to, or they could have 20 to 200 ship tos, right? And they have to think about all the different tax schedules that really relate to that specific customer and apply the correct tax schedule. Now, as Kyle was talking earlier, there's certain parts of the country, like in Colorado, where the zip code doesn't always reflect the true rate because of the boundary situation and in Colorado, as an example, and there's some other states out there that drive this out issues. The way Avalara fixes this challenge is we take that decision or thought process away from the customer service rep, and really the default is put AvaTax on everything, whether it's within GP or within AX, within the customer card area, because that's going to tell the financials to no longer look at its native features for tax. It's going to look at AvaTax for a tax decision. So what do I mean by looking at AvaTax for a tax decision? I'll show you in a moment after we get out Dynamics GP and AX is, in our product, that's where you go to set up your company profile, meaning how do you report as an entity? Are you one reporting entity or multiple? Within those entities, what's your footprint? What's your nexus? Where do you need to charge and report tax? So again, your users aren't having to think about, today I'm reporting in California, Ohio, and Michigan, and oh, by the way, accounting apparently just registered in Wisconsin and Illinois, and we haven't done that for the past 6 years I've been here, so now I got to remember, and there's updated paperwork, and I got to make sure I got the right rates, and do I need to manually build it? Is it loaded in? But I still have to assign it. So all those nuances of questions go away. Now, we're not going to dig too deep into exemption certificates today because we'll cover that in the third day, but the other application occurs when you're setting up a customer and that idea of collecting the right certificate, who's involved with the process. Is it a single state certificate? Is it a single use certificate? Is it a multi-state certificate? And then what states do that exemption apply, okay? So we have a certificate management product that really helps close the gap from an exemption standpoint where you have a customer with 30 addresses, they're in 10 different states. You happen to report in 4 of those states and the customer's only exempt in 2 out of the 4. So you really need to be taxing kind of a combination of the 2 of the 4 addresses for that particular customer. As you can imagine, the combinations around that start to get challenging for users to do it correctly, and they got to have good access to the right documentation, and at the very least go to that documentation and try to see, is it up to date, is it valid, is it expired, and you're relying upon them to try to understand, is it expired, or even looking for that certificate. So Avalara, again, closes that gap by, when you put AvaTax's tax schedule, it's pinging our service, and it's looking at those combination of factors of the origin address, the destination address, where product is being shipped from a warehouse perspective, and then the line items themselves. And of course, customer-level exemptions, what types of certificates are on file, on what states, and are they valid, up to date, and not expired? And then producing that tax result within tenths of seconds. So to give you an example of that, you're looking at a sales order here. I just pre-built a sales order to save some time. But from a user's perspective, what's important is I don't want my users to really have to learn anything new. I just want to key things in like I normally would today, and I want tax to work automatically. And again, that's the nature of the way Avalara is designed, is in the setup or implementation of the product, you need to look at the categories of products and services that you sell to customers and align tax content to those products and services. So to give you an idea of what I mean by tax content, here's an Excel spreadsheet of a tax matrix, and I blocked out all of the tax research, so we're not just giving all tax research away, but this tax content code really represents the category of a service around installation for tangible property. Now, if you were a company based in Colorado for 20 years doing a particular service that was, installation of tangible property was part of it, honestly, in your DNA, and I've seen it many times, they don't think about if they ever needed to move into another state that it could be taxable in 21 other states. They're just not familiar with the rules in other states, and they sometimes go by the assumption, especially around services or labor, that, oh, you know what, it's always exempt. It's not a big deal. And then they find out later once they get an audit notice 5 years into being in another state, or customers let them know you probably should be taxing this, et cetera. So these tax content codes get mapped to a category or grouping or a class from a financial perspective, and then it executes these various different tax rules. So again, manually what you're not having to do is, if you're not using a system like Avalara and you're in 10 states, you need to be able to make your financials make these various different tax decisions in those various states, right? So again, it's the maintenance of having to apply these different decisions, the maintenance of creating the rules, and it's the maintenance of continuing to do the tax research in kind of a broad category like this, installation for tangible property. So again, from a day-to-day use, your customer keys in, or your user keys in an order. I'm just going to go ahead and tab out of this a little bit. And now, when you go to calculate tax, if you save the document, it's going to calculate tax. If you come up here and hit the calculate tax button, it'll reach out to Avalara and update tax. If you want to set it up so every time you tab off a line item, it can calculate tax, that's fine. But if you do a lot of line items, you might not want that. If you're posting in batch, it can do a batch calculation on several invoices at once. So you have a lot of options. One other thing that's kind of useful too is sometimes you may just want to do an inquiry on what tax is from a detail perspective, and you want to see what tax content codes, what jurisdictions really represent the specific a quote in this case, right? So it's breaking down all the different jurisdictional names. So you kind of have the detail if you want, but from a presentation to the customer, you just really want a total amount to reduce questions or comments really from the customer. From an AX perspective, everything else works the same. I'm not going to go through as much here from this case, but the initial setup is again done in your customer card area, and again it works the same. You put Avatax at this level already shipped to, and again that's telling Dynamics AX to really reach out to our tax engine to make that decision. From a order perspective, same thing occurs, right? So you're applying tax content to categories of items. In AX, there's probably there's a couple different options you can do, outside of items, or if you're working with Navision and you're using resources, you can map the tax content to resources. But again, from a user's perspective, everything remains the same. I believe there was a question about, and it comes up for sure, which is, let's say one of my largest customers, everything that we normally sell them is for resale. They have an exemption on file, and but for this one time, they have a kind of a single-use opportunity where they're going to maybe consume this type of purchase differently, or there's a different use type scenario for the purchase they're making from our company, and it's not for resale, and we need to tax that individual transaction. Avalara uses a concept called entity use codes. You can use them at a line level. You can use them at a header level on the customer, or on that individual order, I should say, so that the nature of the transaction is different than maybe what it typically would be. You can also use that detail to help on the back-end reporting with your exempt reporting. And in some states, they want to know the nature of a little bit more of a breakdown in your exempt transactions by category, whether it's for resale or charitable organizations, et cetera. So let's transition over to the tax engine. Kind of walk through, just briefly, what does it look like? How does it work? Maybe even a little bit like what does setup look like? Is it difficult to get it up and running? And a few reports. And then we'll touch a little bit upon tax returns, but we'll dive deeper into the tax return process. Kyle, I think you have me doing the tax return portion tomorrow, so I'll kind of go through more of a deeper dive in terms of the processes that companies typically manage today internally compared to what Avalara is going to eliminate, what the process looks like in terms of outsourcing it to a vendor like Avalara. So this is Avatax. This is, again, kind of going back to the initial part of what I was describing back in GP is our customers are the types of customers that want to go to one place to configure their tax policy. And this is really that portion of the tax engine where you're going to do just that. Is really, how do I define my tax policy as a company? Where do I go to get my tax reporting and tax filing information? And when you first log in, some folks want to know, kind of summary information. Maybe it's, I want to know all the details of the changes we've made to the Avalara database in terms of rates, tax content, et cetera. So you might check on that. Tax exposure, this is really indicating some exempt exposure that's looking at your documentation, what's expired, what's up to date, and the nature of your transactions. So you can start looking at, maybe I need to start updating some certificates in our system. Let's look at setup. So in the organization tab, thinking of when you first start using this product and, it's day one, what do I do first? You set up a company, right? It's just a company profile. It's got your tax information. And then within that company profile, you set up where you have that responsibility to charge and collect tax, right? So you really just check a box. If I drill down into this window, you just see a series of states or countries. You check a box, and that activates all of that content. So again, conversely, what are you doing differently? If you entered California and you weren't previously there, instead of building those 190 some odd state rates for the state of California, you would check a box, in the AvaTax console to really activate that content. In addition, there's home rule states. So if you're working in Colorado, Arizona, or some others, you may want to be selective in terms of what local tax returns you have a responsibility for, and you have the ability certainly to do just the selective locals within the product to indicate where your responsibility is to charge tax locally. From an individual transaction perspective, let me pull up a transaction here so you get kind of an idea of the level of detail that we capture or get pulled out of Dynamics GP, or that's being sent to us automatically that you may not think about, but it's just part of the transaction. Looks like this is one here in Texas. We'll pick on this one. All right, so this is a transaction coming from Coppell to Arlington, and you'll see this entity use code. In this individual transaction, an entity use code wasn't sent over, but again, it's showing it at the header level, and then again at the line level. If you sent that over at the line level, you could make, if this was an exempt customer, this line item taxable through the use of an entity use code that gets passed over. Again, just referencing back to the question from earlier. But as you'll see, the breakout of tax, it's already done. If you can imagine in some of these states, the challenge with some of the manually built tax rates that you set up in GP, AX, or any financial is when, if you don't set up the detail in a particular way, when you get to the tax reporting time, you end up in Excel and you're kind of massaging the numbers to get to a tax return. And we'll talk about that later. But the way AvaTax works is it's really going to build that detail automatically, so it just makes it much easier to get the right information right from our system to a tax return and to approve or reconcile data between the two systems. So in terms of standard reports, of course, we've got a bevy of different standard reports. Customers from a process standpoint certainly start off with looking to reconcile AvaTax with their financials prior to approving tax returns. So you'll run a reconciliation report to look at the totals, the total documents, and confirm that. And then once you do, you'll be looking at, maybe even looking at a sales tax summary report, or drill down into a jurisdictional detail report to actually fill out a return if you needed to. But again, we did well over 10 billion, I think, returns last year in terms of dollar terms. So the vast majority of our customers really prefer for us to do the tax returns, and you'll really find out why when you really realize how many steps we eliminate in tomorrow's call. But here's an example of a summary report, and I know you might need to hit expand on your screen or something to see the data, so I'll just kind of talk through it. What you're looking at is state by state total summaries for total sales, right? Total exempt sales, seller's use tax, total combined sales. But what's nice is you can drill down into each and every one of our reports. So, I'm going to drill down into California, and, within minutes you can really get into very specific invoices in a very specific county and look at invoice numbers and the line items on each invoice with just a few mouse clicks. So this is, again, the totals by state and county, and then it continues to break it down. If I wanted to pull out every invoice at this particular county and the defined time frame I ran the report. I believe that's 2 clicks, and I got document code is really invoice number for any financial system, so whether it's GP or AX, this would be your invoice number matching back to your financials, and then the line items on each invoice. And then if I wanted to take it one step further, I can drill down further, and it'll show the breakout of individual tax flow in a little bit more detail. This is more at the invoice header. So as you can imagine, and I guess I should have hit the button before I exited that, but you can export our reports out to 6 different formats, I want to say. Of course, one of them is our best friend, Excel. PDF is always an option, amongst other formats with tax reporting. So tax returns, again, this is something that we'll cover more again tomorrow, but think of this, this is very much similar to a payroll tax type process. So as you can imagine, for the same reasons many folks have outsourced payroll, they've are really gone to outsourcing sales and use tax. And to give you context around that, Avalara has, gosh, I want to say it's over 20,000 customers now, renewing at 98%. So yeah, we have good software, but as you can imagine, this is just the type of problem that once you outsource it, you don't look back, and compliance is a big part of that. It's just simply because there's a lot of moving parts to compliance that you don't think about day to day until what happens. The guy that's doing it leaves, and then it's on your plate, and it's like the 20th of the month. Tax returns are due. You're kind of scrambling on, well, how's this report really done? How did they get to the California return, et cetera? What the liability worksheet does here is it rolls the numbers into kind of a standard format, so you don't have to know the nature of a California return and how that's different than a Ohio return in terms of how the numbers go on the tax return. You really have to know, are the totals what you want to represent on the tax return to get it filed. So the way Avalara works is we pull this one amount out of your account, this 18,198, and then we would go into each individual return or your existing e-file logins, or if it's a paper return, God forbid, we'll do the paper return, and then file that tax return on your behalf and remit payment. Once we do so, we'll post PDFs of the tax returns and an Excel spreadsheet of the payments that we made in the filing archive. And again, what's nice about this is I know many customers spend a good amount of time after tax returns are processed trying to monitor when the PDF's available to then store that copy of the document locally on your own network drive. Whereas here you can just once a month check a box to download everything, save it, and you're done, or it continues to build up in the filing archive. But Cal, I think overall that's the main points that I wanted to cover during software side. If there's anything else, just let me know, and we'll certainly open it up for additional questions.
Thanks, Matt. That was good. Yeah, I mean, so if there are any additional questions, fire away. I'm going to take control back, Matt.
Yeah, we're in.
Okay. Can you explain what the next set of training sessions are? Yes. Let me go ahead and share my screen. All right. So what we have planned for the next set of sessions are tomorrow is going to be based on the returns and remittance process. We want to get an overview of how that needs to be done, if it needs to be done effectively and efficiently, and really what is our offering in that arena. And then I'm trying to expand these questions. And then the next day, it's going to be revolved around exemption certificates and, how to manage your exempt sales, things to keep in mind of in terms of, all of your exemptions. So, Matt, just as you said, what we offer, it's very similar to outsourcing your payroll. It's got a lot of the same, people outsource their payroll for a lot of the same reasons. They want to stay compliant. They want to have a trusted partner that's going to manage that for them. But they also want to contain the costs and times associated with doing that yourself, so they can really focus on driving revenue. So I think we said it before. It's our goal to be the fastest, easiest, most accurate, and most affordable way to manage all of your sales tax obligations. So if there aren't any more questions, this is my contact information here. If you guys have any questions that you want to take offline or anything like that, shoot me an email. I'm more than happy to have a conversation with you. Same with Matt. And I'm looking forward to doing the same thing with you over the next couple days.
And Kyle, just to jump in here, I posted, people probably saw it, but I posted a link where you could sign up for Tuesday and or Wednesday sessions, just one form there. And yeah, please do enter any other questions you might think of even after we've closed out here. We will make sure we get a copy of those for Kyle and Matt. With that, Kyle, should we begin wrapping up?
Yeah, I think we're good to go. So Jason, thanks for the opportunity today. It's been good.
Great. Well, I look forward to being back here tomorrow for the second session in the series. Thanks to everyone for the great questions and your attention today. We really appreciate it. We have recorded today's event, and we'll be making that available soon as well. With that, we will conclude today's event. Have a great day, everyone.